let's talk about this IPO. I mean, why does it signal good things ahead for the auto industry?
Well, what we're seeing today is an industry that's dealing with a depression level of sales. It's not quite as bad as it was a year ago. But if you can make money at this level of sales for a high fixed cost industry like the auto industry, and the profits are not insubstantial, they're very significant, and we are still at a very depressed volume in this industry. And what that says, particularly in a business where you have manufacturing, once you lower those structural costs, as you begin to build market again, and we don't know when that's going to occur, what kind of growth is going to occur up over the next few years. But the potential for profitability in companies like a GM, Ford, and Chrysler are really enormous. And if you think of GM alone, they've taken $4,000, $5,000, $6,000 out of the cost of a typical car. And where they had a competitive disadvantage vis-a-vis, for example, the internationals building cars here, they now have a competitive advantage on cost. So that really dictates a whole different business model.
David, just very quickly here, at the same time, the company itself saying market share could fall by 2014 and earnings are going to moderate in the second half of this year.
Well, I think that's right. We have a lot of uncertainty with respect to the future economy and the future auto sales. But when you have this low a break-even point, it means that over the longer term, this is going to be a very profitable company. Of course, as a part of the filing, they have to outline all the risks, the good news and the bad news.
Right.
But when you look at the fundamentals of manufacturing, when you take structural cost out like they have, you're really setting the table for very good long-term profitability.